Thank you for tuning in. Our next presenter is Mike Reinhardt, CEO of Quisitive Technology. Mr. Reinhardt, you may begin.
Wonderful, thank you. Appreciate everybody joining us this afternoon. I want to introduce you to the Quisitive story. We're the Toronto Venture Exchange listed company under the ticker QUIS. We're a focused U.S. operation focused on being a premier partner with Microsoft across North America, helping organizations leverage Microsoft cloud technologies and as well as some other first-party innovation things that we're doing. Quick background on me, I've been in and around the technology universe for over 30 years. Started my career and really grew up in a large Fortune 500 biomedical device manufacturer, Medtronic, where I was really focused on being the liaison between the technology organization within the enterprise and the business leaders who are using technology to enable and create business outcomes, and really learn to grow and understand about how technology is an enabler and creating that value. Over the last 25 years now, I've been focused on building technology services organizations that do that across many enterprises in systems integrator model, and in this latest iteration, Quisitive, really focused on building out and creating this scale partner with Microsoft. Along the way, in this 25 years, I've become really closely aligned with Microsoft and their leadership, and being a premier partner with them as we work to build and deliver value to our mutual customers. And along the way, I've sort of become the father figure inside the Microsoft partner ecosystem, and I've one of few that has a regular opportunity to meet with leaders, including Satya Nadella, the CEO, as well as Kate Johnson, President of the U.S., and Judson Althoff, who runs our global commercial business, and really how we come together to build and grow our business in concert with them as they take their technologies to the enterprise marketplace. So the mission of Quisitive is really centered around building this scale partner with Microsoft. There's really kind of three elements to that mission. One is taking these capabilities that we have, leveraging Microsoft and the technology footprint to help organizations move, operate, and more importantly, innovate, leveraging the Microsoft cloud platforms to create and execute on their digital transformation. Second is we're developing our own first-party cloud-based solutions in SaaS and transaction-based offerings that we're taking to market to sell into those enterprise customers. Along the way, using an M&A strategy to complement both of our business areas to really grow and scale as we go forward. So across those, we'll kind of do a quick overview of where we're leveraging and working in partnership with Microsoft and enterprises to facilitate implementation of strategic initiatives leveraging technology. The second is, as part of our IP portfolio, a product we call LedgerPay, which is the first cloud-based payment processing and payments intelligence platform that we'll touch on. And then third, we'll talk about our M&A strategy in support of those two business areas to grow and build our business. First, we talk a little bit about why Microsoft and why we have chosen to partner with them. One, obviously, my long history and close relationship with them, but more importantly, we believe they are the cloud leader in the enterprise space, and certainly have a large footprint, not only in everything you hear about around Microsoft Azure, but they have a full cloud complement, including things like Dynamics for both ERP and CRM capabilities, and Microsoft 365, which is their security and modern collaboration tools and things like that. And we're one of their premier partners across all three of those clouds, and one of very few. We're committed to that platform, which gives us specialized access to both from an engineering side as well as a joint go-to-market. Obviously, we're very biased about how great we are, but it's important to know that Microsoft also acknowledges and recognizes what a strategic partner we are. And in fact, we were named the United States Country Partner of the Year in 2019, which is the highest award that they give to any partner in the country. We have, as we go, there's a whole process that Microsoft does to validate that, and it's a unique specialization process that they've implemented where to become part of this exclusive group that they have, there's these deep specializations that you need to become certified on, going through a very sophisticated audit and review process by a third party to validate that, and it's, again, differentiating us in the scope of a broad set of Microsoft partners. We think Microsoft's a great partner to go to market with in this enterprise space, as they're a leader, and it gives us great growth and opportunity to leverage their technologies to help enterprise customers. So I'll talk just briefly about that cloud solutions business model. As you think about customers, what they're really working to do is what we call the customer cloud journey, and really it's about how do they first move into the cloud and start to take advantage of some of the cost savings and other kinds of things. How do they operate efficiently in that cloud to make sure that they're gaining the value that they expected in that move, and then most importantly, how do they start to innovate and create new business outcomes as part of that process. We have a set of services in this that we bring to life that's all centered around helping them on this journey. And this journey is a long-running 3 to 5 or more year journey as customers look to do that. Kind of our target customer profile market you'll see there under our ideal customer profile. Typically, our segment is going to be customers that have revenues on the low end of about $500 million a year in revenue, on the high end $5 or $6 billion a year. There's certainly exceptions outside of that. We're selling into the C-suite, both on the technology side, on the operations side, as well as the CFO and others. Our service set, project services, are really about, we have a set of services where we go in and help organizations first understand this journey to the cloud. And where are they? What have they already done? But many are very early stages. It's still kind of the first inning of a 9-inning game, as we describe it, around this journey. We have a set of assessment and offerings where we go and help customers understand that, build out a 3 to 5 or more year roadmap of what that would look like. Microsoft actually funds us to go and perform those assessment services that take anywhere from 3 to 6 weeks to help an organization get that perspective. And they've introduced us to over 250 enterprise customers to go and do this. And they do that because they trust us and know that we're going to go in and help their customers understand the value of the Microsoft Cloud and the best path to go and leverage that as we go forward. We then also provide a set of services to help customers take some of their existing environment, whether it's servers, data, application, and migrate those into the Microsoft Cloud platforms, and set of services to do that. These services represent about 25% of our overall cloud solutions business and are typically 40% gross margin businesses. Once customers are starting to move into the cloud, then that's when some of our recurring revenue streams start to bring themselves to light, as we are first and foremost helping them understand and optimize, and part of that is we are the reseller of the Microsoft Cloud licensing and services. So when your customer as an enterprise chooses to use any of the Microsoft Cloud technologies, we will license it to the customer will pay us, and we pay Microsoft and get anywhere from 15 to 30% margin on that licensing, with very little marginal variable cost to provide that service. In addition to that, then we complement that on a managed services model where we're providing governance and provisioning services and overseeing data and application services from a managed services perspective, and those are typically done on a 3-year subscription model with monthly recurring revenues, and our portion of that grows as the consumption grows as we move forward. Then the other pieces, and that represents approximately 20% or so of the business today. And those margins, as I said, are in that 15 to 30% range based on the licensing side. On the solution services front, this is really the really strategic part to enterprise customers, where we bring our rich understanding about how to build modern applications for the business, everything from new data and analytics platform capabilities, leveraging bot services and artificial intelligence and machine learning to create predictive outcomes for the business. Integrating and building out really modern new business applications. An example, we're working with one of the top 5 tax and audit advisory firms, and they've chosen us as their strategic partner to productize their services. So as they go to market to provide SOC compliance services in a financial audit perspective, we're helping them build a product that removes labor content and puts it in models using predictive capabilities, helping them then manage and deploy that into their customers. We then host and run it under a recurring model into their environment and are their third-party partner to bring all that together, and that represents close to 50% of our revenues, and those gross margins are in the 45 to 50% range. Next, I'll touch on, so that's kind of our cloud solutions business, really centered around the strategic partnership with Microsoft, growing through execution of helping organizations move, operate, and innovate, leveraging the Microsoft cloud. The other part of our business is really centered around what I call inventing the future, but it's really around these first-party IP solutions that we're creating for our business and bringing to life. We have two of those in our portfolio today. One is a product called mPerform, which is an employee performance management solution that's really centered around organizations managing their employees, setting goals and objectives, doing performance reviews, career planning, all the kinds of things that you would look for in that kind of solution. We're seeing great traction in this product. We have over 100,000 users. Margins on this piece of the business are 60+%. And again, seeing really good momentum as people are moving more and more to the remote model, both as part of the pandemic and natural motion, and customers looking for a mechanism to help manage that, and we see good momentum there. The second is kind of a marquee product that's really a fintech play inside our business called LedgerPay. And this really stemmed from an initiative that we did working with a consortium in the U.S. called Merchant Customer Exchange, where we helped the largest merchants in the world, Walmart, Best Buy, Target, Shell, Phillips 66, you kind of name them, they were part of it. We helped them build out a payments platform leveraging the cloud, connecting bank like Chase Bank with merchants like Best Buy and others to really demonstrate how the cloud could be a disruptor in this very long-standing payment ecosystem. And that was the genesis, and over the last 4+ years, we've been building a product that is built on Azure, is in the first cloud-based payment processing platform with a unique set of capabilities centered around payments intelligence for brick and mortar that I'll touch on here in a moment. Kind of at the platform itself, LedgerPay has really two pieces to it. One is it is a true full payment processor leveraging Azure as a disruptor in the cloud, connecting merchants and their point of sale with Visa, MasterCard, and doing full settlement of a transaction across that. We're able to do it at scale at a lower cost, leveraging a highly secure, highly scalable platform like Azure. Microsoft has actually been involved in helping us co-develop components of this to be embed into Azure as a service to make it a fully compliant and integrated platform, leveraging all the capabilities of Azure and the security models that they've created. In addition to that, we've created a platform we call Payments Intelligence, which is really about unlocking data and rich data insights from payments data. Kind of the analogy here is that, you know, we all think of our experience in buying things through a lens of Amazon or other e-commerce platforms where they know everything you've ever bought, they know everything you've ever looked at, and they have this really rich ability to target personalized promotions to you based on what you've done and others like you have done, and really able to optimize their marketing dollar and act and create buying behavior. Well, most merchants, especially those that live in a hybrid world of both online and brick and mortar, don't have that ability. Quick serve restaurant, convenience store, grocery, and others, just to name a few. You go into, using a McDonald's example, if you go to McDonald's today, this morning, got a cup of coffee and an Egg McMuffin. This afternoon, you went to the same McDonald's and got Happy Meals for your kids. They have no idea that you're the same consumer. Many retailers or others try to use loyalty programs and things to try to get you to know who you are, but the problem is they have very low adoption rate for in loyalty programs, low single digits in many cases. And further, many times the people that are part of that are already loyal, and so giving and promoting to them while it maintains loyalty is not growing the loyalty of their broader base. Well, with LedgerPay and our Payments Intelligence platform, we have a unique mechanism where we capture, using that payments data, unlock that data to now know that. So using that example, when you go, because the form of payment that you use is typically the same payment, visit over visit, we create that breadcrumb trail. So now when you go to McDonald's that second time, we know that you're the same person that was here in the morning and that you were here last week. And we now have this understanding about your buyer persona, and now we can really enhance the loyalty mechanisms and the ability for them to personalize any promotions that they would give to you real time at that point of sale, not only online, where many people have been doing things similar to this in the past. We now bring it to life real time at the point of sale, which is new and different and not been done before. And it's the combination of these two that creates a really compelling platform for LedgerPay, and it's something that we brought to market. We're in the final stages. We're securing our bank sponsorship and certification to the endpoint of Visa, with the expectation of that being completed here in late Q1, early Q2 of this year. This product's been fully developed. All of the payment processing capability is fully developed to do debit, credit, as well as ACH payments from a B2B perspective. The payments intelligence platform is fully activated. We're in the process of building an analytics and AI model to enhance the capabilities and insights for marketers and others to layer on top of that, which will be an additional revenue stream in this LedgerPay product portfolio. As we do this on both the cloud solution side as well as LedgerPay, we're taking it to market through direct sales, marketing motion, and have a really robust sales function to go do that. We also are obviously leveraging our Microsoft channel and relationships to go in jointly together with them to customers do these things. But we also have a strong M&A strategy, and there's really two components to that strategy. One is that we're executing a targeted partner consolidation strategy on this Microsoft side. There's thousands of Microsoft small point solution providers that we can bring together. We've executed and completed a couple of those acquisitions that I'll touch on here in a moment, and we'll continue to fuel growth in that side of the business, bringing in a diverse set of capabilities with a target profile of most of these services providers being $10 to $50 million in annual revenue, EBITDA in the 10 to 20% range. We're looking to grow through geographic reach across North America and potentially further into Europe. Certainly continuing to expand and deepen our cloud specialization capabilities for Microsoft, as well as incorporating industry acumen and capabilities. The second part of our M&A strategy is as an offshoot to our LedgerPay and payments processing capabilities, is we're actively in process around acquiring and targeting companies to that from a payments technology component to come in and accelerate and really fundamentally transform our fintech capabilities and bring that to life here in 2021. That profile is merchants and merchant portfolios in really a couple different flavors, but typically $5 to $30 million annual revenue. These are 90% recurring revenue businesses with EBITDA in the 25 to 30% range. The profile of these are ISOs, or independent sales organizations, that have merchant portfolios of 5,000 to 10,000 merchants that they're doing processing for. And we're also looking at potential payment technologies, ISVs, that would be complementary to that. There are a few compelling value points that get brought to life through this strategy as we execute on it. We have active, advanced discussions going with several targets in this space. But one of the things these ISOs, they have, if they have 5,000 merchants, they're currently processing payments with one of the other payment providers like a TSYS or First Data or others. As we acquire them, we will convert that expense into a revenue stream into the LedgerPay business, which is actually one of the big expense components, and that alone will increase revenues in that targeted acquisition by 15%, with the vast majority of that falling straight to the bottom line. So in a business that is doing $10 million of EBITDA, we would see incremental synergies on a revenue side of $4 to $5 million in that arena as we acquired them and converted them onto LedgerPay. So kind of where we are in that journey today gives you a quick timeline. The company was brought into the profile. We went public in fall of 2018 on the Venture Exchange as listed. We completed an acquisition of a company, Corporate Renaissance Group, based in Ottawa, Canada, in June of 2019. About a $6 million U.S. revenue business, doing about $2 million in EBITDA. Really strong business with very strong focus in the office of the CFO, and really leveraging not only ERP platforms, but budgeting and performing and consolidation services, et cetera. In January of last year, we completed an execution of a company, Menlo Technologies, about a $17.5 million U.S. revenue business, about $2.5 million of EBITDA, that was headquartered in Silicon Valley, had capabilities, offices in Washington, D.C., as well as a satellite in Austin, Texas. Our U.S. headquarters is in Dallas, Texas, from the Quisitive legacy business. Also, though, Menlo had an offshore development arm in Hyderabad, India, as well as a growing presence in South America. We've launched the initial component of LedgerPay last year, did do a bought deal financing in June of 2020, as well as some balance sheet cleanup things to strengthen the balance sheet and really clean things up. So today, as a snapshot, we're a $50 million U.S. run rate business, with very little of that being contributed today by LedgerPay. LedgerPay is really coming to life here in 2021. But roughly 20% recurring, 16% adjusted EBITDA, and you can see the other metrics and statistics here. So when we take a look at it, this is a kind of quick snapshot of the capital structure and growth of the business. Strong organic growth at 15+% annually, as well as then accretive growth through acquisition as we move forward on both the cloud solutions business as well as LedgerPay. So in summary, the thesis, we have this very experienced leadership team, including former executives at Microsoft that are part of our team. This unique position with Microsoft to drive not only the work we're doing with enterprise customers, but also the product activation that creates recurring revenues through LedgerPay, and this M&A strategy that fuels accretive growth as we move forward. So really, that's a little snapshot. Certainly welcome any questions you have. I see there's a few in the queue. I'll take a quick look at those, and if you have any, please feel free to forward them in. The first question is really centered around positioning LedgerPay with competitors such as Shopify, Square, et cetera. So what's interesting is LedgerPay does something that they don't. Shopify is a great example. Shopify front ends payments, but they actually don't process the payment. They connect into payment processors to do that. So in most cases, these guys are only doing the front end of that payment processing, not actually doing the settlement and connection back into Visa and MasterCard. And those that do it are doing it in an e-commerce space and don't have the ability to do it at a brick and mortar. And further, we unlock this data insights through a payments intelligence platform that none of them do and are not in a position to do that. Question about COVID-19 and the effect on Quisitive's operations. What's been interesting is we're a highly remote business in terms of how we execute and deliver. We use all of the collaboration tools of Microsoft, Teams, and messaging and other kinds of mechanisms. So we already operated in a highly remote model, so very little disruption to us. Obviously, some of our customers had that, but generally we continue to grow the business as a result and continue to see strong demand for transformational services, leveraging the cloud and in particular Microsoft's cloud capabilities. Next question here, you asking about bank sponsorship. We are, and the status of that, we are in very final stage discussions to complete that bank sponsorship with a U.S. bank. Which is an important component. In order to connect with Visa MasterCard, they are an association of banks, and you must be sponsored by a bank. We've been in active discussions going through all the final due diligence and drafting agreements, and are in very late stages of getting that completed. As the next question I have here is really centered around the one or two things that investors should look for in 2021. And really, there's a few things. One is we'll continue to fuel our growth on the cloud solutions business side, centered around organic momentum built leveraging the Microsoft Cloud and our capabilities as we bring these companies all together under our one Quisitive strategy, and additional M&A activity to continue to accretively grow our cloud solutions business and continue to build momentum in that way. On the other side, on LedgerPay, we see LedgerPay and 2021 being the breakout year for LedgerPay, both in terms of obviously securing the Visa certification endpoint as we move into Q2 of this year, as well as we look to do this transformational M&A strategy around LedgerPay, really bringing to life these merchants and onboarding them into our footprint, not only to capture the payment processing, but now have an install base of 5,000 or 10,000 merchants that we can introduce our payments intelligence platform and create new revenue streams into the business doing that as well. Those are the questions that I see in the queue at the moment. And certainly appreciate everyone taking the time today. Certainly don't hesitate to reach out. You can contact me at mike@quisitive.com or my Chief of Staff and Head of Investor Relations, Tammy, at quisitive.com. Thank you so much, and have a great week.
And that concludes this webcast. Thank you.